Welcome to Business Today Television. In our ongoing series on how to navigate markets at record high, we are today joined by an eminent personality. Mr. Anand Rathi, founder and chairman of Anand Rathi Wealth Limited, joins Business Today Television to discuss what to do forward. Mr. Rathi, we are very grateful that you spared your time. Over the last more than 5 decades, you've been a part of India's fantastic journey, both on the market side and across corporate India. You've been an avid watcher of markets, a very well known investor, and now the founder and chairman of Anand Rathi Private Wealth. I just wanted to ask, in this wonderful time that we are seeing on Dalal Street in terms of record highs and how investors are pouring money into top line stocks, how do you feel where India is today and where is it headed forward?
Thanks for inviting me. Shail, I believe that India is really at an excellent stage today where the growth, the growth cycle, the best growth cycle has, to my mind, has started. And next 10 to 20 years, any country, if you look at their background, they had best 15, 20 years during which they've grown fastest, be it US, Japan, China, recently we have seen. So I think my belief is that India is on the cusp of starting that high growth phase, though last 15, 20 years have been good, but to my mind, next 10 to 20 years will be better.
Wonderful. Mr. Rathi, let's take this conversation forward. Obviously, markets are at a record high, and there is a feeling of a lot of millions of investors who've missed this rally. What do you think is driving momentum on Dalal Street? What has changed in 2023, which was not there in the last 2 years? And where do you see the markets headed, say, in the medium to long term?
You see, I think in last 2, 3 years since pandemic, I think India as a story has developed extremely well because one, the impact of COVID was perhaps amongst the lowest in India. The biggest strength of India has been its entrepreneurship. And if entrepreneurship is supported by the government initiatives and reforms, so what has driven is the impact of reforms which have happened in last 10 years. Huge reform. GST, for example, is a huge reform. The opening of the Bank Dhan Yojana is a great reform. So I think these reforms are bringing that impact into the growth of the country. Besides that, I think the confidence, the global confidence is increasing because you have seen that earlier, before 6 months, the FIs sold hugely in India, thinking that it is overvalued. And they sold almost $30 billion. But in last
Yes.
4 months, again, $7-8 billion have come. And now, my belief experience is that the savings chase earnings. So
Yes.
the global money will go where the earnings potential is greater. And that's where we are today. I think our earning potential this year's corporate earnings are going to be great. I think next few years again, because we are starting with a basic, cycle, the infrastructure investment. Earlier at one time we had investment cycle, another time at consumption cycle. Now
Correct.
there's going to be combination of two cycles.
Wonderful. Mr. Rathi, at the same time, since you are a past master of managing wealth and amongst the top three players in the private wealth segment, a lot of HNI, ultra HNI money and retail investors like me and so many of my ilk are pouring money via systematic investment plans. When you talk to people around you, do you see investing into markets not being what it was maybe 5, 7, 10 years ago? People were hesitant to put in money because of the changes that have happened in the market. That is also one of the underlying reasons for the markets to be buoyant at this level.
Yes, I think what has changed in last, let's say, I'll even a period of 15, 20 years, the entire understanding on the investments have changed. Earlier people used to invest only in real estate or gold. The equity market was not preferred because the education was not there. Now in last 20 years, 25 years, we have seen a lot of expansion of education and people are realizing now. In fact, today, people have realized that the only asset class which can give them a return above the inflation, and I'm saying about 10% plus return, which can give is the equity. You know, the real estate, gold are not that attractive. So, people with better understanding, better knowledge about the investment and wealth management are realizing that they need to allocate more allocation into the equity market if they have to really make high returns on their portfolio.
Wonderful. Mr. Rathi, let's drill this down a little deeper. Uh, as we were discussing, you spent more than 5 decades investing in India and, of course, managing blue chip corporates. Tell us, imagine there is a 25-year-old person who comes to you and says, Ki, I wish to invest in India and ride this fantastic 25, 30-year multi-decadal boom that you're talking about. What should I do?
You see, basically, the key is asset allocation. For any good wealth creation, asset allocation is the key. And obviously, in asset allocation, you have to consider the risk which you are taking in doing any asset allocation. So we should create a mathematical model of risk as such. People will talk of low risk, high risk, but unless until you put in numbers, and that's what we have developed, that very unique process. That this is your for example, Nifty, the volatility shows the risk involved. So if one standard deviation of risk Nifty is 13, in individual stocks it will be more than 20. We
Hmm.
have designed portfolio where this standard deviation is less than 7. So that's
Hmm.
how we think that if you can have a lower risk and return of 12 to 14% is a reasonable return to expect. So we advise young people, don't think that you can double your money in 1 month, 6 months, 1 year. That then you will be taking undue risk, and therefore yeah, you may get into trouble also. So if you want to make consistently good returns, go in long-term investment thinking and go into the equity markets. Some asset allocation, obviously depending on needs, you need to do in that market. Maybe some money you want to keep liquid in your bank accounts or fixed deposits. That has to dependent on individual requirement. But uh, the higher allocation, at least 50% allocation, should be into equity.
Wonderful. So, allocate more than half of your investable surplus into good quality equities, invest for the longer term, and please accept that 12 to 14% compounded CAGR over the next 5, 10, 15, 20 years is what you should be satisfied with. Wonderful. Mr. Rathi, let's take this conversation forward. You've talked about a golden era that's upon us over the next 10 years. Tell us 3 or 4 sectors where your own experience and your asset management team is bullish on, and where are they putting that money?
You see, in the growth of any country, two sectors which are most critical are the banking, financial markets, and second is the infrastructure, because the higher growth is always accompanied with higher investment on infrastructure. The latest example, China, as I was talking, you know, their growth rate has gone to 12, 13% when they're hugely investing in that. So obviously these two sectors will remain very good. Supporting these sectors also, the basic product like cement, will always be in great need, because we're expanding housing, is construction industry is going to do good. So basically in the growth industry, every industry participates. So when I tell people, yes, I can tell at the moment which are the good, because this keeps on changing. Today, like pharma looks pretty attractive because it has
Hmm.
gone down. But long term also pharma is very good, because health is going to be a large investment in health sector. So I think
Absolutely.
while selecting sector, people should look at the individual stocks. In every sector, there are excellent companies. There are some laggards. So I think one has to be very careful looking at that. And one suggestion which I give is that if you don't have expertise, go to mutual funds.
Wonderful. I wish Mr. Rathi would speak on individual stocks, but he won't. Let's take this conversation on a different plane, Rathi Saab. Often we've discussed the market looks very good and these are the 4 or 5 things we should do. But a lot of people just end up doing the exact opposite. They get into speculation, they earn money in options trading, and they enter and exit very quickly. They don't ride the entire chain. What are the 3 or 4 things that you would advise young people not to do in this kind of a market?
I think one thing which you already mentioned, that speculation is not the right thing for to do. People may get more kick out of that. So I always tell Kavi, if that is there, put 5-10% money for that, but don't put all your money into such speculative market, because obviously these days, even on the screen, the exchange is putting a notice that doing options trading is very risky. So I
Yes.
think not many people have made money in that. So I think one thing. Second, I would also tell people not to put for short term, not put short term money into the equity market. Please
Okay.
put only money which is at least 3 years or more. Okay.
Mhm.
If your money, sometimes people say, I have 20 lakhs, my daughter is going to get married after 6 months, so I'll put money for that. My strict advice to them, don't do that. Okay. Because I've seen many people suffering. They might lose that money during the 6 month market can, go 10-15% up and down. So, second thing I advise is not to put short term. Third is that, again, they must have a balanced portfolio. Okay.
Correct.
Not put all eggs in one basket. So I think if people go for stocks, I would suggest that have a portfolio of 30 to 50 stocks. That is diversification is another thing. People should not take concentrated position. Fourth is don't go by rumors and hearsays, and particularly, uh, somebody is saying in your morning walk of some stock. I think don't go by those. Better, go through the studies. Not if you are capable yourself. Otherwise, go to a good advisor. These days, advisors are available everywhere in the country. So I think these are the 3-4 advice I'll give to any investor.
Wonderful, Mr. Rathi. It was such a pleasure to hear experience worth 56 years in less than 15 minutes. We are very grateful that you spent your time with us and gave such wonderful advice to a country that's young, it's raring to go, and it wants to invest in this wonderful rally that we are seeing now and the extensive growth that is coming over the next 15 years. Thank you very much for your time, Mr. Rathi.
Thanks, and I hope your viewers get some advantage of what I have mentioned today. Thank you so
Of
much.
course, of course, sir.
Thank you.
That, ladies and gentlemen, was Mr. Anand Rathi. He's the chairman of Anand Rathi Wealth Limited, an extensive and deeply rooted player in Indian equities. He's had over 5 decades worth of experience both in corporate India and on Dalal Street, and every word that he says is full of wisdom. Thank you for joining us. I hope you enjoyed this wonderful experience and interview that I did as much as I did for myself. And I hope this will be a roadmap for you on how to track and invest in this fantastic rally that we are unfolding in front of us. Thank you for joining us and remain glued to BTTV.
If you like the video, do like, comment, share and subscribe.